Hello everyone, good morning. It is Saturday in Chicago. I am your host, The Cowboy, and welcome to Elliott Wave Cafe, Bitcoin and Ethereum Elliott Wave analysis, where every couple of weeks we take a look at the chart and try to make sense of the price action through the eyes of the wave principle. So welcome everybody, let's get going. It's been a couple of weeks and then Bitcoin has done some naughty price action. It's been, quite impulsive in here and tried to break through this trend line. And since then we sold off a little bit and kind of came back into quite negative territory in here and almost tried to overtake this $33,000 low. Now, as you're familiar with my counts by now, hopefully, if you're not a new subscriber, we're looking at the larger trend as this being a wave 1 and then this being a wave 2. And once I kind of show you this, then we'll dive down and look what happens at the smaller degrees in here and see how we can make sense of the price action. And I'm going to take you for that first back to our larger count. So this is my white count where I'm looking at this larger cycle, wave 1 completed here, followed by a second. And then this remains one of my main interpretations of Bitcoin that kind of tells us that probably by the end of this year we'll be going towards $200,000. And I have posted a chart of this on Twitter and I have gotten a lot of responses. It was a very, very active tweet on there with a lot of back and forth on that aspect. Some people are positive on it, some people are negative on it, but it is something that definitely it's at the forefront of my analysis where I'm looking at this wave A decline and this larger pattern being a flat. So a 3-wave down in A, 3-wave up in B, and then a shorter C wave that terminates above the wave A low, which constitutes as a running flat formation since wave B has overtaken the origin of the wave A. Now, things have gotten a little trickier once you've gotten the sell-off, and we were almost right there to kind of take off these lows and pushed lower, which would have changed a little bit the count, not super strongly, but you would have kind of thrown a little bit of a cold water on this interpretation, because the moment you break below these levels, in terms of the right look, things start to have a different shape, and the likelihood of this pattern panning out, it's getting diminished. So let's go back to Bitcoin and take a look here. So you're looking at the 1-day chart. Again, that's that A wave decline up in B and then down in what we're thinking here. It's an impulsive wave in wave C. And there's a lot of argument about how you kind of come down from this highs to these lows. The impulse in here, the larger decline here in this third wave, that's the strongest move in the sequence. I think that's a big sell-off. It is bigger than wave 1, so we're not stepping in any rules there. And then you have the 4th wave and then a 1, 2, 3, 4, and 5 for the 5th wave. So counting in like this then allows us to look at this move from this lows to this highs and as an impulse. And you can notice in here that you've placed a trend line, right? Almost like a 2-4 trend line that was taken out, which means that there is a change in the trend of the market. Now, mind you, this move did not continue higher. In our program, we've had this counted in several ways. You were looking for the 1, 2, 1, 2. There were, a little bit more bullish scenarios, which, kind of fell apart the moment that the market started to sell off. But I still think there is reason in here to look at this move as an impulse higher and then as a corrective move lower. So if that's the case, then we cannot come below this low back in here, which is 32,900, right? This wave 2 cannot travel below the origin of the wave 1. Otherwise, we would have a degree violation. We would have a count invalidation. And this would be the bottom of the wave 2, maybe a little bit of a pullback in here, and then start a larger 3rd wave advance, followed by a wave 4 and a 5th wave to complete wave 1 minor, and then so on and so forth. You continue to push higher for the rest of the year. And this remains my primary count in here. So this is kind of what I am watching. Now, on a smaller time frame, if I drop down from a 1-day, let's say, to a 6-hour chart, what you can see in here is that, you can have an ABC formation down. And, there's a lot of arguments about, maybe this count being a little bit forced into thinking that, this does look more as an impulsive move in here, which I agree with. But I am continuing to respect the larger count in here, this larger second wave, right? My level of conviction has decreased a little bit due to the fact that this rise in here, in this supposedly wave 1, it's a little debatable, and also this decline in a wave 2, it's a little bit debatable. So this throws a little bit of a cold water on the scenario, but I'll continue to respect it until this back in here gets kind of taken out, this low in here at about 32,900. And if that happens, then I have to revise my whole thesis and look at alternate scenarios. But until that happens, I'm going to continue to respect this count. Now this wave 1 in here, the way I'm kind of looking at it as a 1, 2, 3, 4, and 5, right? So you can look at this 1, 2, 3, 4, 5 in there with a smaller fourth wave and a small fifth wave. You can look at that. And then you can also make it sort of a leading diagonal in here with a little problematic. I'm going to decompose it here as a leading, where you would put this wave 1 back in here and then a wave 2. And then you have a 1, 2, 3, 4, 5 for 3. Right, and then you have your fourth wave in there, maybe a triangle, and then a push higher here in the little fifth wave. So that's one of the ways to kind of look at this. Although I'm sorry, in the leading diagonal, you're supposed to have, this is not the whole thing is a leading diagonal, just this move here in the wave 1. I'm sorry about that. Let me just kind of go back and delete that. So let's do it as a regular impulse. I'm going to just do it here as an impulse. So you go in a wave 1, 2, 3, 4, and 5. So that's the correct way. And then this wave 1, look at it as a leading diagonal in the 1, 2, 3, 4, and 5. Now, as you know, in the leading diagonal, this third wave, right, needs to pass above the wave 1. And we're barely just kind of just a little bit below that. And you can, I can kind of argue a little bit with the swing, maybe depending on who's your data provider. But it's something that I'm kind of willing to work with and bend, let's say, the rules a little bit here. But it is something that I am, considering, although it's not my, let's say my preferred scenario. My preferred one would be that's a wave 1 in there, right? And then that's a 2, and then a 3, a smaller fourth, and a fifth wave in there. So, that's one of the ways to kind of look at it. And I wanted to dive in this because I know, I'm going to get questions about this, and it's like, hey, how are you actually counting this? This looks like a 3-wave move. And, why are you making this as an impulse? And this is one of the ways to kind of count it, which is not against any of the rules, except that it bends a little bit, right? The right look type of approach. So respecting this kind of second wave back in here, I'm going to look at this as being an impulse. I'm going to look at this decline as being an AB with a larger C wave. So it's a very, very deep second wave. And then we're getting a wave 1 of these lows, wave 2, and then a continuation higher. So if you go back and taking a look at the even smaller time frames here at the 2 hour, right? 1, 2, 3, 4, 5, maybe we're getting an ABC in here. This can come down. You can do some fibs and look at this as a, something like that, maybe come back to, like a 38%, 50, anywhere between 38 and kind of 618 for the second wave pullback. And that should, trigger, let's say, the next buying wave for a much larger push up higher. Now, the thing is, if you're starting to get above this B wave high, which is an important level in here, the swing way high in here, about 44,500, this discount, and if it does so impulsively, the discount will start to gain more traction, right? And then by the moment you take that and you start to push higher here, then it's going to start to look, much, much better as this being a second wave. If we're going to continue to push lower and kind of sideways and not create a big impulse, then we're likely to change this, and it's likely that this will kind of start to fall apart, right? So the price action will tell us if you're starting to drag along, come back and revisit this low, something of that nature, then it means, there's something else cooking, and you might have to revisit your count. And this is the beauty of Elliott Wave, because it tells you, what your expectation is of a count, around, and then when those expectations are starting to get destroyed by the market, right? Every single data point that you're getting on the right side of the chart, it's another clue in, is this working or it is not working, right? So just like we've had here before, this was a nice impulse. We have traded this leg up in here into the room, so it was a nice trade, but that 1-2-1-2 scenario fell apart the moment this B wave, this wave started to fall short of continuing higher, and the market actually saw lower. So this was a clue from the market. Listen, your count there is not working out. Let's see what else we can work with and still maintain our bullish stance due to the larger degree count. All right. So this is kind of where I'm at on the primary, and I wanted to dive a little bit on this interpretation so you guys can see, what we're talking about every single day in the pro room, and, every morning video that I do around 9 o'clock every day, 9:30, where we dive in and discuss Bitcoin and trade assumptions and setups and things that kind of the market throws at us, where we can analyze the price action it's in entirety, combining with other indicators and other macro aspects and things like that I talk about every single day. So this is just a rundown of that process a little bit here. So to conclude here in the primary count, this remains for me as an A, B down in C with a wave 1, a fall down in a wave 2, and then I'm looking for this larger 3rd, 4th, and 5th. Taking a little bit of the clues also from the equity markets, especially NASDAQ, which I'm going to touch in a second in here, it could be something that starts panning out here shortly, maybe over the next week or over the next couple of weeks here. So we're going to take a look at that. Now, the next count that you guys are familiar with is this larger triangle, that I follow as my alternate count, where I'm looking down in 3 waves here in the wave A, up in B, and then I'm looking at the C wave as a 3-wave decline and an A, B down in C. And then it's going to get followed by another move up here in 3 waves in a wave D. You can count this again. You can go ABC for a 3-wave down in X and then another ABC for Y. Or if you think, if you're okay with this looking impulsively, you're looking at this as being an AA down in B and then a C wave up. So both counts are suggesting, let's say, a continuous move higher. And here is something that I've touched into the live stream that I've done Thursday. So every Thursday we do live streams at about 9:30 with the pro room, and where I spend about an hour and 15, depending on questions and interest, where we touch on macro, Bitcoin, alts, gold, let's say S&P 500. So all the macro aspects in the general markets, followed by what's going on in the crypto land as well. And one of the points that I've stressed on there was this, that the C wave could not be over, and that's how one of the ways that this market could continue to push, where then you're basically looking at this decline impulsively, right? Or as a complex correction, you can look ABC for a W up in X and then another ABC down, and the C wave can still be alive as part of a triangle if you're going to make new low. So that's one of the things that's in the back of my mind in case this market kind of breaks lower. But it's important that it stays above the swing lows in here, this 30K level, this major level that was back in the summer of 2021. So that's one of the ways where, triangles can somewhat trick you into believing that, a sequence is done and is actually not done yet. A similar story can happen with the D wave and an E wave. And this basically, at a larger degree of trend here tells you that, in terms of a time travel, you still have a little bit more to go until, this fourth wave starts to match the second in terms of its size and its magnitude and things of that nature. So it's very, very close. This is my alternate count. The first one that I have is this bullish one, right? That's a B down in C for a running flat here completion, and then follow very, very closely by a triangle if this market continues to kind of move lower. Taking a look quickly at the naked charts on the daily, we have a pretty nice rejection of these lows. It matches a little bit, what's going on in the NASDAQ as well with that pullback of these lows. We're still below some important moving averages in here. You're looking at the MACD lines, so the 12 and the 26. We want to overtake those as well to start to build on the bullish momentum in there. And then taking a look quickly at the weekly in here, we'll see how we're going to close, but we're still below this, again, this important moving averages in here. So we got to take this momentum. And you can see this also on, let's say the main moving averages. So this is the daily, we're below the 200. 100, well below the 50, well below the 21. So the momentum is not on the bullish side just yet. We're starting to work on it a little bit more. We've had a failure above here, and now here we are hitting resistance up into those levels. So if this market is to rally, we got to overtake those levels of resistance and continue to push higher. So I wanted to spend just a little bit of time here taking a look at another setup, and this is more if you're on the bearish camp, right? So if you're thinking that this move, and it's very, very possible that that is the way this move is going to unfold, you're basically looking at this decline here as being a wave one, right? So you're like, well, I think this is a double top in Bitcoin, and this is a major cycle, and this market is going to crash much lower, right? There is really no way of knowing if that's going to happen or not, and everybody that tells you with conviction that that's what's going to happen, I think they haven't seen markets long enough. Conviction levels, they vary, right? They vary between, let's say, if you look on the scale, let's say between 0 and 100, and you should never get to, I think 100% level of conviction, right? You can get, maybe to a 75%, 80%, but everything that is higher than that, in my view, I think it's just, you're too sure of what the market is going to do, and usually when you are too sure, things are not really working out like that. So again, my level of conviction on the bullish count remains pretty strong, based on that flat scenario and the fact that you are in a growing network and it continues to be adopted and things of that nature on the fundamental side. But it doesn't mean that, something can come out of the blue, maybe, on the political side, on the regulation side, and all of a sudden you're finding yourself in a much larger bear market, right? So there's all kind of forces that can derail this market, from its uptrending stance in here. So, for that to happen, right, you especially on the counting side, let's say that you have reached a major top in Bitcoin in there, and now you're looking at the wave one decline, or you can look at it as a 1-2, right? If you wanted to stay, let's say, even ultra bearish like that, although the second wave it's much bigger than this, which is not a big problem, but it's a slight indicator that might not be the right count. And then you're going bearish in a 1, up in 2, and now you're starting to decline in this lower third wave. Well, if that's the case, that means that's the wave 1 of a smaller degree. So you're going to go like that. You're going to go, let's say that's wave 1 is done. You're probably going to get a 2, 3, 4, and 5. And then you're basically going somewhere up in there. And then let's say this goes a little bit lower into the count, and then you are like that, and then this fourth wave travels sideways and you're beginning the decline. And if you kind of dive a little bit lower in here, right, so that's 1, 2, and then let me do this really quickly, right, and then even go back to a 6 hour, then you're looking at this decline as being an impulse, 1, 2, 3, 4, and 5. For a wave 1, you've done an impulse in a wave A, you should be doing, let's say, a B wave decline, which would be in same line with our second wave pullback on the other scenario, right? So 1, 2, or AB, which means that you're still going to get a rally higher, let's say, in this C wave of 2. Because if you really think about it, right, this should not be the entirety of a second wave. It does not look, to me, it looks very, very impulsive. So it kind of fits the scenario, let's say, of this being a wave A. So shorter term here, even if you're bearish, you're probably still going to get a little bit of a rally upwards, maybe, let's say, towards 42,000 or something like that. You can do some fibs in here and do something like that when you're going in all 2, and then, you're looking for a 618 zone, 41,000 down in B, let's say, and then up in C, or maybe towards 43K. And then you can see if you're going to push higher above the swing highs, which is about 44.5, right, that this second wave becomes quite unlikely. And then, if you're overtaking 45, then you know that your approach is wrong, and then the market is about to break much, much higher. So that's kind of how I'm looking at the bearish stance as well. I'm not ignoring the bearish counts at all. I'm just telling you from my view and understanding of the market so far, I am going with this count first and this count second and something like this as a third choice in there in terms of a bearish outlook in there. And you know as well that I have this count, under my yellow in here, where, you basically can count this as a completed sequence in a wave one, which means that any decline you would get would possibly be a much larger second wave pullback in here. You would look at the wave, let's say 1, 2, 3, 4, 5 for an A, then up in B, and then down in C. So something of a much larger bear market that can take, several years to unfold if this was a major top in Bitcoin. All right. So that's kind of where I'm at on my Bitcoin analysis. And let me kind of jump back and take a quick look over at what I wanted to show you regarding with the NASDAQ, because these markets have been, kind of moving tick for tick lately, especially when you have more of a risk on environment. All the correlations, increase, and they start to be very well correlated in there. And especially when you get, stronger moves to the downside, because Bitcoin, it's a risk asset, and it's been kind of treated as such, especially since larger institutional involvement got got in there. And, since it's could be considered a new technology, right? It's something that has growth and it will continue to grow. Then you have to kind of put it in the category of, let's say, the NASDAQ stocks. And you've been hearing the stocks, lately as well. And I think, I agree with that. It's something where until Bitcoin becomes more stable as a store of value, and, the price is much higher and you're not going to have as many swings, right? And you get a mass adoption of it, then we're probably going to start to temper down and you will be on a different category. Until then, you kind of have to treat it as something that's growing, and it's prone to have this large fluctuations in the market, and this, higher beta value regarding, comparing with the rest of the stocks. So putting it in the NASDAQ category, I think it's very important. And you can see in here, right, that Bitcoin did not make a new low, but NASDAQ did it. And now, we're kind of pushing up higher, which is it was a very kind of strong push in the NASDAQ, especially for the past couple of days, on Thursday and on Fridays. And I'm going to show you this here really quickly. I'm looking at the chart of the NASDAQ, and I have some counts. I can go through it if you want, but it's like, I'm going to make this video too long. I'm just going to briefly probably touch on it here. But, very nice rejection of these lows. And this is one of the things that kind of give me a little bit of confidence that Bitcoin could start to rally here over the, I don't know, in several sessions, maybe, who knows exactly for how long, but it is something that the fact that you've gotten a big rejection candle out of these lows tells you that there could be a break coming in here and a move to the upside, at least, let's say, towards the middle, maybe to the end of March, where NASDAQ is trying to recover in here and maybe come back and retest, 15,000 or maybe even up to 16,000, something like that. Because if you look at the finished pattern back in here, and this is an ABC, then you could be done and move to new all-time highs, right? And it's kind of hard to say that with everything that's going on the geopolitical spectrum, but the market is basically telling you here on a 2-day chart that there was a massive rejection of these lows, and you kind of have to listen. And just kind of looking at it, through the fact that there is a big correlation in here between these stocks, I think it's important to kind of listen. So here is a 12-hour chart. All right, this is where, the correlations get a little bit closer. If this kind of wants to update on here. So you can see how you're kind of climbing higher, you're kind of going sideways, you're selling off, Bitcoin sells off as well, you're pushing higher, you have a little bit of a divergence in here, right? So as Bitcoin continues to push, NASDAQ is actually selling off, which, also for me was a signal that, this move in here could have troubles. And actually we picked another long that we kind of got off before this latest sell-off in here, because the markets were not really responding to our bullish interpretation. So it's clues that you can take from the NASDAQ market, and I wouldn't dismiss it. If anything, I would continue to kind of keep an eye on that to guide me on my views on Bitcoin a little bit more, and just kind of help with the setups. So go ahead and continue to pay attention to this. I think this is an important correlation. You can look also at the 1-day chart, kind of how it looks, back on a 2-day chart, even better. I mean, look at this thing, right? Just kind of sell-offs and then up higher. Bitcoin made a top. NASDAQ did not. NASDAQ continued to push higher. You create this top in Bitcoin as well. And then you kind of started to fall apart. So I think the correlations are there. They're important. And I think it's a it's something to definitely watch. And here is, because I promise you I'm going to take a look at at the counts in the Nasdaq here. Here is what I have is a 1-2, and it is a larger trend line. Possible this is another 1-2 happening in here. It's probably just the initial decline, maybe with another B and another C to the bottom of the channel. So it's something I'm watching. And then on a more bearish count, right, this could be, let's say, a larger fifth wave. You can get a decline here in a wave A, B, C, or maybe a larger triangle. So I'll continue to kind of watch these. Guys, if this is a completed 5-wave pattern, right, then you're looking at a much larger decline in the Nasdaq. Nobody really knows, right? But it's something that I'm definitely watching and kind of monitoring how this develops. Because if that's the count, and this is a big fifth wave, let's say, that's been reached in the markets, then Bitcoin will probably suffer again in a much larger correction over the next, let's say, couple of years at least, because these corrections are not going to unfold in a couple of months, right? There's probably going to take a longer time for this larger, let's say, A, B, C in here to unfold. And you can look at it like that, right? It would be something like that. You would get, something of that magnitude. You can come all the way back to the fourth wave lows in the pandemic, and that will definitely send Bitcoin and the rest of the risk assets much, much lower. But I'm optimistic. I'm optimistic in the fact that the economy is reopening. I'm optimistic, in these technology stocks that they've been, some of them have been taken to the woodsheds, and there's been a big bear market in, in a lot of the growth stocks. And I think they've reached, a lot of important lows, and there is actually time to scoop some of those. And I've started to make some videos about, every single day. If you go and check my video channel, you'll see that every single day I'm going to attack a different chart, and I call it chart of the day, either being a stock, maybe a currency, maybe a crypto, where I show members and people kind of how I'm counting the wave structures, what I'm looking for, and hopefully you guys can pick some good information out of there. So go ahead and check that out. I've started it last week, and we've covered already, I think, 4 stocks, right? From Tesla to ARK ETF. I think I've done Facebook, and I think I've done Coin. So check those out, because I think you can pick a thing or two out of there. All right, let me jump over and take a look at the Ethereum chart in here, and let me go back and find my Ethereum. And this is my main platform in here. We're taking a look at a lot of coins, altcoins in here, and I have counts on all of that stuff that I try to regularly update for our members. We have a chart channel in there as well. But listen, until we're starting to get a little bit of a resurgence of price in Bitcoin and Ethereum, the odds are not going to act in a much different way. They're just a much higher beta, let's say altcoins in there, and assets, if you want to call them that, and they're going to just swing much more, right? But the main focus, at least for me, it's on Bitcoin and Ethereum, because they are the ones that are the, the big beasts of this market, where you can get a lot of clues what's going on. So, going through all the alt counts sometimes is not really necessary until you're starting to get, much larger signals from the bigger markets. And then you can kind of start to dive in and say, well, now we can start to look and anticipate certain moves in there, and this is where the price targets are, so on and so forth. So I'm going to go in here and take a look at Ethereum, and I have also a couple of counts in here. Excuse me. So one of them is this main count that you're probably super familiar with by now. When I'm looking at this, just like in Bitcoin, and this being an A, B, and then down in C, right? So just that kind of larger running flat. I can also show it to you back in here, right? So that's at the larger count, 1, 2, 1, 2 in a flat, and then a move higher that's just kind of barely started from the bottom of this channel, right? So that's one of the counts. The other one, it is the triangle count that we're following, just like in Bitcoin. That's an A, B, C, up in D, down in E for the continuation higher. No point in going over it, with some targets, over about $10,000, when you're probably going to finish up, let's say, this wave 5 primary of a larger wave 3 cycle, or as another wave 1 for that matter, right? We'd never really know, as you're making new highs, exactly at which degree of trend you're finding yourself, especially when you're in a market that's so new and developing, continuing to grow. But this is 2 of the counts that I'm watching on Ethereum. Both of them are fairly fine. I'm going to continue to kind of pound the table on this one for now, and until we get evidence of the contrarian. Now the scan from these lows looks a little bit better in Ethereum. You can see that this is actually a much better impulse, and that gives me, you know, more confidence in actually how I'm counting a Bitcoin as well. So looking at this moving here as a nice impulse, right, in a wave one, then a pretty clean, I would say, let's say 3-wave correction here in this, you know, second wave. Although on a second look, you might say 1, 2, 3, 4, 5, right? It could be very, very possible in here. And that would be, let's say, wave 1, and then you're getting another ABC in here for the 2, and then you're actually crashing lower. But again, I'm going to respect this as a 1, 2 for now and see if we can get a much larger move. And one of the clues would be a climb above this 31.86. So we're not out of the woods yet, right? We have a nice rejection of this low. That's important. But again, this could very simple be an ABC, right? You can go up in A, down in B, and then up in C, and their software is playing a little trick on me. And then this is a 5-wave decline. That's an ABC, and then a push lower. So near term here, I'm going to continue to watch what happens, you know, after we're getting this move. If this starts to appear only as a 3-wave move and I'm getting rejected, and not only that, but if you're starting to get below, so if you're getting this move and then you're starting to get back below that B wave in there, right, with the price, then you know that that was a 3-wave move and you're probably going to break lower, you know, or you're maybe doing, let's say, a, you know, something of a triangle in here or something like that, right? And I'm missing it. The C wave is not over. You're basically going down in A, sideways in B, and then down in C, as long as you stay above the A wave. So again, you know, Elliott wave, it's not super complicated. It's got a lot of variations to it. There is a lot of ways that you can, you know, skin a cat, for the lack of a better term, right? And, you know, no offense to the cats. I love cats. I actually have a cat. Her name is Elvis. Yep, we give a female a male name because we like Elvis, and I think it's not a problem. But my kids kind of named it. So, you know, and Elvis is a little bit of a beast. She's kind of running all over the place, knocking down plants and scratching, and she's not even 1 year old yet. So anyway, just a little tangent on the cat situation. But yeah, again, kind of going back, I think there's a lot of ways that you can count, and you will see people trying to, you know, come up with all kind of crazy scenarios and look in the future, maybe, you know, a little bit too much and a little bit too far ahead of time. I'm basically taking things one step at a time, looking for evidence, looking for confirmations, looking for failures, and then trying to adapt my trading strategies based on that. Longer term, I remain very bullish on these assets. I continue to hold them. It doesn't mean that just because we're going to get, let's say, into a larger bear market in Bitcoin, I'm going to sell it. I continue to, you know, try to gain yield on it and, you know, continue to accumulate it. And, you know, for me, it's one of those things where you're decoupling your holdings from the wave counts necessarily. And if you're thinking that you're going to go in a larger bear market, you can hedge. You can maybe take some short position on different markets, maybe on futures. But in terms of, you know, personal holdings, I continue to remain a bull. I like this. I like, you know, the traction that it's getting, and I think it's going to continue to grow. Shorter term, you know, remains to be seen. Again, I'm looking for clues, and you know, it's the best I can do with my approach. But I think Elliott Wave is you know, it's a pretty good tool. It gives you, you know, a lot of information where you're wrong, where your targets can be, and it can kind of help you, give you a pretty good roadmap and make you a better trader, a better analyst, and just give you an overall look of the market cycles, kind of where you are and what to expect. So anyway, enough of that, guys. This is my analysis on Ethereum. You know, I thank you for watching. Please don't forget to subscribe and like this channel. We're continuing to grow at a pretty fast pace. You know, I really like it. Let me know in your comments what you think of this. You know, any suggestions for me, come and visit us into the pro room. You know, take a 1 month and see kind of how you feel about it, see if you like it or not. You know, and again, check out my other videos on there. There's a lot of information in my channel. And, you know, check my Twitter page as well. My Twitter page is pretty awesome. It's growing in there. You know, a lot of interactions, and I like it. And again, I appreciate you for being here, sticking with me for so long. And I'll talk to you a bit later. Bye-bye.